Well, let's shift over to the outlook, at least from the C-suite. There's a new CEO Business Roundtable note that describes the sentiment among CEOs of some of the largest companies here in the United States with the big headline: the economic outlook is now fading, especially with the geopolitical risks. Let's bring in Yahoo Finance's Rick Newman, who's got the breakdown of that outlook from the Business Roundtable. Rick, again, that index appeared to have tilted down, but of course, no one knows what that means. What's in the index, and explain to us why this is significant.
It's a survey of CEOs by the Business Roundtable, basically asking them, how do they think business is going to be during the next 6 months? And on three measures, you're right, it did tick down. So they think hiring is going to be a little less robust than they thought during the last survey, and then a slight downtick in sales and also in investment. But these numbers are still very close to historic highs. So I think that probably tells us they're just moderating their views a little bit because of the inflation we've seen. For people wondering, the survey period does include most of the time after Russia invaded Ukraine, which happened on February 24th. So they were factoring that in. But to conclude on a fairly positive point of view, the CEOs still see about 3.9% real GDP growth for 2022, which is the same thing they saw the last time they asked. So that's, pretty decent economic growth.
Now, I want to pivot to something else that the CEOs at the largest companies might be paying attention to, which is also climate disclosures. The Securities and Exchange Commission, this kind of actually just crossing the tape, releasing a proposal for the way by which they will want public companies to disclose their risk as exposed by any sort of financial change, for example, from fossil fuels to more greener energy. What are you seeing from the SEC's changes, and how impactful is that going to be to companies that honestly have not been as transparent up to date about how exposed they are to climate risks?
Well, without a doubt, the Biden SEC wants publicly listed companies to disclose a lot of data about carbon emissions that they have not been disclosing, or they've been disclosing in kind of an uncoordinated way. I mean, the rules are just not real clear on this. So what the SEC wants is companies not just to say, here is our own amount of carbon emissions. They want also to them to say what they call scope 3 carbon emissions, which is emissions from any other firm in your supply chain or any firm you may be investing in. And if that sounds complicated, it is complicated, and it's probably going to generate a lot of pushback from industry, and I think we're going to see this litigated too. So the SEC is trying to figure out how to craft a rule that could actually be enforceable and survive legal challenges. So I think this has a lot further to go.
I mean, Rick, let's just get spicy with it, right? We're already seeing some Republicans come out with statements. There was a Wall Street Journal op-ed this morning from Patrick McHenry and former SEC Chair Jay Clayton saying that this is an activist approach in trying to force companies to turn away from traditional fossil fuels. But then you have Democrats and those that are, pro this rule saying we need this to make sure investors are fully aware of what's coming down the pike because that transition is already happening. Where do you land on kind of whether or not this is the right way to be approaching this?
I think it's appropriate to let the courts decide. I mean, we've never had to deal with anything like this before. So if you think about the Biden administration pushing pretty aggressively for companies to include their entire supply chain. I mean, other suppliers they don't have any real control over, to put that information out there. So maybe they're going to end up with something a little bit less than that. But that they are pushing hard to try to get something formal on the books where we're actually doing this for the first time. So maybe it's going to be the companies disclosing their own plus some additional information. But we don't know the right answer here. So I think it's appropriate to let the courts decide.
But I mean, do you think investors care? Right, because I think the whole point of this and having them disclose it in their 10Ks is investors, especially with ESG, all the rage now, want to know about this type of thing. But is this the SEC misattributing what investors do care about, how much they're actually going to spend in terms of reading disclosures, which are already kind of long right now, to be honest?
Well, some investors clearly care. I mean, Larry Fink of BlackRock comes to mind. He's one of the main forces pushing for this kind of thing. And he himself, I mean, this is the private sector. This is the biggest investment firm in the world. He himself and BlackRock are pushing. They are activists. They are pushing firms to do this. So BlackRock clearly would like to have this kind of information. As for mom and pop investors, I think, you're sounding pretty skeptical, Brian. I think that's probably okay. I don't think this is something ordinary retail investors can really digest. But, we are tussling over all these big questions of what to do about climate change. And I think we're barely in the first inning on figuring out how to deal with climate change, who should be responsible, who should bear the costs. This is really the biggest question about climate change and how it affects, everything. Who should pay for it? And I think we're just beginning to grapple with that question.
And again, this is a proposal. As we know, things down in D.C. move relatively slowly between proposal and final rule. So we'll see if things change once they do finally get it across the finish line. Yahoo Finance's Rick Newman, thanks so much.